Thanks for joining us. This is Business Incorporated on Channels Television. I am Bisi Adebayo. Coming up today, Nigeria's economy sees highest quarterly growth performance since the 2016 recession at 2.55% in Q4 2019. Egypt to launch bid round in March for gold exploration in Eastern Desert. Plus, the UAE allocates $2 billion to development projects in Mauritania. But let's begin the show with intraday market activities now. Major bourses in Africa were negative earlier on, with the JSE in South Africa taking the heaviest hit by 3.78%. Here in Nigeria, the index shed 0.43% at about midday. And cross over to Egypt now, where the EGX 30 lost 1.57%, and Kenya closed negative on Friday. And major Gulf stock markets were lower at intraday today, tracking weakness in global shares and oil prices as the rapid spread of the coronavirus in several countries outside China sought sentiment. Saudi Arabia's benchmark index declined 2.62%, and that was dragged down by losses in banking shares. And in Qatar, the index extended declines from the previous session by 1.3%. The Abu Dhabi index slipped 2.20% as the top lender, First Abu Dhabi Bank, lost 0.4%, while Dubai's index lost 0.79%. And in Europe, stocks opened sharply lower today as investors focus on the continuing spread of the coronavirus and watch as Italy grapples with the largest outbreak outside of Asia. Let's cross over to the Frankfurt Stock Exchange now, where my colleague Chelsea Delaney is standing by to tell us more. It's good to see you today, Chelsea. The number of coronavirus cases in northern Italy has surged, raising fears of a global pandemic. How are the markets reacting to this?
Markets here in Europe are really in free fall today. In Frankfurt, the DAX is down about 3.5%. But in Italy, the stocks are getting hit even harder. The Milan index is down more than 4%. That's going to be its biggest loss since 2016 if it maintains that decline for the rest of the day. There's really a lot of fear here in Frankfurt and really across Europe that this virus is going to continue to spread, and that's going to really lead to more economic problems for businesses and economies here in Europe. Italy also is already quite weak economically, so I think that's all really weighing on investors today.
But Italy has already moved to quarantine several towns outside of Milan. What kind of impact could this have on businesses in that region?
They're already seeing an impact on businesses there. So there are about 50,000 people that are in these towns that are now quarantined. But the main focus is really going to be on the big industrial areas in Italy. Milan is a huge financial capital. That's where the fashion industry is really based. They are also home to many banks. Unicredit, Italy's largest bank, is already saying that workers should work from home if possible. And I think this area is really crucial to Italy's economy. Lombardy, where the region where Milan is based, accounts for about a fifth of Italy's gross domestic product. So it's really a crucial area, and of course now the concern is that the number of cases, the outbreak is going to continue to spread outside of this region, and that could lead to more business shutdowns and consumers avoiding spending, things like that, that could really be quite difficult for the Italian economy.
German business confidence picked up in February despite concerns over the impact of the coronavirus on Europe's largest economy. Now, according to data from Germany's IFO Institute, what drove the improved sentiment?
This data is really a bit of a head scratcher for investors today. People really were expecting a much bigger impact from the coronavirus fears on the survey data, and that it didn't appear to really have much of an impact on business sentiment in early February for German companies. So why that is a little bit unclear at this point. But what really drove the increase in this month's data was a better perception of future business conditions. So businesses seem to be a little bit more optimistic about the future. But I think it's still too early to really call this a turnaround for the German economy, which is dealing now with coronavirus, but also a more cyclical downturn in the manufacturing sector. So I think we're going to have to wait for some more data to really see if this business sentiment improvement really holds up.
Well, we have our eyes on those data. Many thanks, Chelsea, and we'll do this again tomorrow. In the UK, the FTSE index of leading blue chip shares fell sharply at open in London. A surge in new coronavirus cases outside China has sparked fears of a pandemic, sending investors to the safety of gold and hitting commodity-facing stocks, including miners. Let's bring in Juliana Olayinka, my colleague in London, to bring us up to speed with the numbers. Good afternoon, Juliana. Now, some market analysts are already emphasizing that financial markets face uncertainty over the coronavirus outbreak. What would be the implications of this, and what are the intraday numbers saying?
Good afternoon, Bissy. Well, we're seeing the implications, aren't we, particularly in the UK and Europe. I didn't catch what you were discussing with Chelsea and Frankfurt, but I presume even in the continental Europe, they are really reeling over COVID-19. The fifth person has been confirmed to have died in Italy as the number of people with the cases are surging. A lot of countries are considering closing their borders to Italy because they're just so worried. Specifically, the FTSE All-Share is down 3.27%. The FTSE 100 is down 3.48%. And the FTSE 250 is down 3.07%. In currencies, the pound is also down on the dollar by 0.46%, down on the euro by 0.18%, and down on the Japanese yen by 0.72%. Now, triple-digit falls on the FTSE are not totally uncommon, but when it's up to 200 points, it's definitely worrying. Also, as well, there are a lot of airlines that are taking the brunt of this. EasyJet today, the budget airline, their shares are down 11.7%. The tour package holiday group TUI, their shares are down 8.9%. And the intercontinental hotel groups, their shares are also down 5.6%. So it's getting worrying.
Well, Primark is warning of COVID-19 supply issues. Equities analysts are saying that there is some good news in the retailer's owner ABF figures published today. Any idea what the good news is?
The good news is that the Associated British Foods Group is saying that the 6 months to February, they're expecting their profits to rise by about 4.5% if you compare it to the same time last year. But overall, the ABV Group's readings today were pretty abysmal. Their shares at the moment are down about 3%, and that's really because, of course, their biggest business is Primark. And even though Primark in the UK are doing pretty well, they're not suffering with the bleak of the high street like so many other big names are. But the problem with relying upon cheap labour from China is that now that COVID-19 is really taking the grip, they're worried, and they've announced to shareholders that in the coming months, if it continues the way it is, then it's really going to dent their profits because, of course, they're going to struggle to get those clothes out of China. Now, they have said that they do have some factories across the world that may be able to take on the bulk of the issues if it does indeed continue. But as we said, you know, cheap service and clothing in China is really affecting them today, which is why their shares have dipped.
Well, let's take a break from the COVID-19 issues now to talk about this interesting one from the DG for Economic Statistics at the ONS, who says the number of men in part-time work in the UK is increasing and the number of women working part-time has fallen. What exactly is driving this shift?
Well, this was a radio interview, and it hasn't really picked up much pace in the UK at the moment. And I suppose it's because, you know, once you look further than the quote, there's nothing really in it. But yes, there are 2.2 million men in part-time work in the UK, and that has increased over the past 10 years. There are about 6.3 million females in work, and that has been decreasing. But what a lot of analysts are saying is that the reason why part-time work for men has increased is because a lot of work is flexible at the moment. So you can still be an executive or chief of staff, so to say, and work part-time. And men now are also staying at home. So before, where a lot of full-time mothers would be working part-time, they're not having to. They can work a full-time job because they've got a man at home taking care of baby and washing the dishes.
Quite interesting that things are changing now, Juliana. Well, let's do this again tomorrow. Do enjoy the rest of your day.
Thank you.
Stocks in South Korea led losses among major Asian markets today after the country raised its COVID-19 alert to the highest level following a rapid spike in cases over the weekend. The Kospi was down 3.87% to close at 2,079.04. Its shares of automaker Hyundai Motors plunged 4.3%, while the cost fell 4.3% to end its trading day at 639.29. Elsewhere, shares in mainland China were mixed on the day, with the Shanghai Composite down 0.28% to about 3,031.23. And the Shenzhen Composite advanced 1.36% to approximately 1,933.36. Hong Kong's Hang Seng Index fell 1.73% as at the final hour of trading. And shares in Australia also fell, with the ASX 200 closing 2.25% lower at 6,978.3, as almost all the sectors declined. Markets in Japan are closed today for a holiday. And of course, stock futures stateside pointed to sharp declines on Wall Street at the open today as the number of coronavirus cases outside China surged. Earlier on, the Dow Jones Industrial Average futures were 614 points lower, pointing to an implied opening plunge of 607 points for the index on Monday, while the S&P 500 and Nasdaq futures also pointed to declines. The moves came as investors continue to watch developments surrounding the coronavirus outbreak that was first reported in China but has spread rapidly in other countries, especially South Korea and Italy, which reported a spike in the number of confirmed cases in recent days. Was fears surrounding the economic impact of the spread of the virus led stocks on Wall Street to sharp losses on Friday, with the Dow dropping more than 200 points, seeing its first close below 29,000 since February the 4th. We're staying with the markets, but this time at the crude oil segments, were tumbled by more than 3% today. Of course, as the spread of the coronavirus in several countries outside China continues to leave investors concerned about the hit to demand. Brent crude was down 3.6% to $56.34 a barrel, while U.S. crude futures fell by 3.6% to $51.45. South Korea's fourth largest city grew increasingly isolated as the number of infections there rose rapidly, with some airlines suspending flights to the city until March the 9th and the 28th, respectively. Meanwhile, gold prices climbed more than 2% to their highest since February 2013 as a spike in the COVID-19 cases in several countries outside China heightened worries about a hit to global economic growth, prompting a flight to safe havens. Spot gold was up 1.1% at $1,661.86 an ounce, and U.S. gold futures rose 1%, trading at $1,664.60. Among other precious metals now, palladium eased 0.5% to $2,690.52 an ounce, and silver was up 1.2% at $18.69 an ounce, and platinum fell 0.7%, trading at $966.54. When we return in just a moment, we'll take a look at Nigeria's economic growth in 2019. Do stay with us.